Welcome back. You're still tuned in to Midcap Radar. Affle reported a stable set of Q2 earnings despite the impact of regulatory ban on real money gaming in India. To put it in context, 2% of Affle's revenue historically came in from real money gaming. To discuss the quarter gone by and to understand how the company will offset the impact of the gaming ban, we're now joined by Kapil Mohan Bhutani, who is the Chief Financial and Operations Officer at the company. He's joining us now to discuss this and a lot more. Thank you so much for joining us, Mr. Bhutani. Barring the 2% impact that you had because of RMG, the numbers look decent. We've seen this time around 19.1% growth on a YY basis. Are you expecting that impact to continue in Q3 as well? What led to the 19% growth that we saw this time?
First of all, thank you for inviting us on your show. We have been resilient on our growth side. We posted around 19.1% growth on our revenues despite the effect of RMG. But this was helped by the early onset of the festive season in the month of September itself. And we believe that we'll be able to offset the RMG effect in one to two quarters more. We'll be able to offset the deficit caused by the RMG.
Understood that. Mr. Bhutani, the other question what we want to ask you is, especially when it comes to the developed market, earlier, the growth rate over there was in the 20% range or slightly above that. But in the quarter gone by, it slipped down and it's now below around the 17-18% mark. Is that the new normal, or can we expect growth to revert back to the 20% levels?
We don't believe it's a new normal. We are gunning for 20% growth over a medium term. However, the atmosphere or the consumer sentiment is being watched carefully. It's not about the customers are not wanting to spend. It's the consumer behavior and inflation expectation, which is leading to wait and watch for release of higher budgets.
So you're seeing that impact on ad spends as well by clients?
So basically, the budgets are in the, moved from Q2 to Q3 festive season, which starts with the Thanksgiving there. Okay. So we expect we should be able to recover from there. However, the 20% goal for the developed market is on the medium term.
Over the medium term. So FY26, can you quantify a guidance for us, both emerging markets as well as developed markets, and especially EBITDA margins, the combined EBITDA margins, what can we expect?
So as stated in previously at the start of the year also, we are saying that we are gunning for about 20% growth overall, broad-based in all markets, whether it is emerging markets, India, or the developed markets on a broad-based basis. We believe that we should be in the range close to 20%, plus minus some basis point. We should be there in the range of 20%.
Okay. You have 4 segments. There is commerce, edtech and entertainment, fintech, FMCG, gaming, health tech and hospitality. Amongst the 4, what was the breakup in terms of growth in the first half, and what do you expect for the full year?
So we are believing that the fintech was a little slower to start with in the developed markets. It's picking it up, and I think so. The other verticals are doing as nicely as they were supposed to do as per plan. Whether it is e-commerce, whether it is entertainment, both have been providing a good support to us, including entertainment, including gaming for us.
Okay. Mr. Bhutani, the other question and something that you just alluded to, you mentioned that there is now an early sign of a recovery as far as domestic ad environment is concerned. Q2, was that halted? Was there a wait and watch mode, especially with the upcoming GST reforms? Q3, what is it on ground, and what is it that you're looking forward to, especially from the domestic market in terms of ad spends?
So we are not saying that there was a halt from the customers for wait and watch of GST. It was only for a month of early part of September. Okay. However, with the festive season starting early, say about 20th of September, we started seeing the flow of budgets coming in, and that helped us.
Okay. So you spoke about what the revenue growth would look like, what the margins would be, and how the macros are panning out as far as the global uncertainty is concerned. You are focusing on premium offerings as well. What are the optimum cost per converted user rates? Currently, it is at 58. Will that continue to be the number?
Our aim is to maintain our CPCU rates as well as maintain our margins at the current levels. and improve the overall operational efficiencies using technology and artificial intelligence to give efficiencies on the margin side.
Okay, Mr. Bhutani, when you're talking about the average CPC rate, it hovered around the 58 rupees mark. Now, going forward, especially given the aggression that you have planned, should that moderate, or do you expect that to increase further?
No, we don't expect it to go down. We are going to maintain or increase from these levels.
Okay, and the other point is, especially when you're talking about the domestic ad environment, what we want to understand from you is, which is the segment from where you're seeing the maximum amount of growth? Is it the newer age businesses, or is it a comeback of the domestic business, of the earlier or the old age businesses, if you'd call them?
So new age businesses have always been there. Those were the first ones to adopt the digital ad ecosystem. However, in commerce side, we are seeing that the money is flowing from the traditional media to the digital side more frequently now.
Okay.
Okay, all right, Mr. Bhutani, thank you so much for joining in today with your thoughts and the outlook on company's performance going forward. By the way, those flashes at the bottom of your screen where Vodafone Idea has moved the court again. The stock is higher by 1.5%, and this is related to the AGR dues yet again. They are likely to flag inconsistency in recent Supreme Court order on AGR dues. They had indicated that Vodafone Idea or the government should do something which is in the best interest of the consumers and the company as well, and for the sector overall. So they are going to flag SC order stating it had sought relief only against additional AGR dues, that is. So this is something which is, the number is at 9,450 crore rupees. So we'll be watching out for that one. And we'll get in Ashmit as well as to what the details are on this one. The stock has seen has actually fell from the highs. It was up around 4.5% at a point in time.
Key point here is, so there were two AGR dues that's being discussed. The earlier one is a much larger amount.
Around 83,000 crore.
83,000 crore. But the Supreme Court verdict was quite clear that it is only for the additional 9,450 crore. So in case there is a clarity on the earlier and the larger AGR dues, and in case there is any relief, then that will be a material development as far as Vodafone Idea is concerned. We'll get more details from our colleague Ashmit, who's given us this particular development and who's given us this particular story. He's been tracking this for quite some time, but important flashes on the bottom of your screen, both for Vodafone Idea and also subsequently you will see some impact as far as IndusStar is concerned. But moving on, here's a quick note for our viewers. As you can see on your screen, there is a Moneycontrol stock score just above the line graph. This is a score assigned to each stock based on Moneycontrol's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the four factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or a sell recommendation. Any investor, viewer is advised to carry out necessary diligence on their own and to a certified financial advisor for investment decisions.